Hello, good morning. It's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com and for your trading needs. The additional educational website as well, where I update charts and provide analysis and commentary on the markets throughout the day, US, European, Asian markets, FX, commodities, etc., is www.cfds.education, and certainly visit that to learn more. Okay, a FTSE 100 analysis this morning. It's currently approaching 7 or 6:50 a.m. Let's see exactly where this market stands. The US market's pretty stellar. Still, the QE rally continues very impressively. The fact that the Fed is forced into a corner. Obviously, we'll find out today with regards to the minutes. It's a very busy day, especially with regards to the FOMC minutes. You've got ECB meeting accounts, and you've got the BOE minutes as well. So it's one hell of a day. It's one hell of a day. Okay, so basically, US markets obviously ramped higher last night, although Asian markets have not followed. Given the fact that the Shanghai or the Chinese markets were supposed to open up plus 10%, that obviously isn't the case, as you can see, up 3%. And also given the fact that the Nikkei has certainly pushed back, given the fact that the BOJ has done no additional stimulus, and the comments overnight and the data overnight aren't exactly confident for you to certainly be bullish. So US futures have obviously come off the highs. We had a pivot high of 4335, the Nasdaq, and we did revisit the 2000 level on the S&P last night into the close on good volume, and that obviously has fizzled out. Currently, we're back at 4,300 in Nasdaq, and the S&P is back at 1980. So this is going to be very, very interesting. I'm going to do a US market video as well, just to explain the setup there, the potential next move. But for now, the Nikkei is down, and that's certainly understood to be a risk-off type event. And given the fact that the Shanghai hasn't opened up as high as everybody expected, given the stellar rally in Europe and the US. Okay, right, the FTSE 100. BOE minutes today, obviously. We'll have to basically comprehend them and understand them and see exactly where the next move will be. And a lot of individuals, given the fact that the NFP, post-NFP movement has been towards a delay or a pushback in terms of hikes in the US, and that obviously will force every other central bank in the world to do so as well. If the US is delaying, then it's inevitable that the UK will delay as well. That's the logic anyway. Okay, so in terms of economic data today, let's just go through that. Obviously, the minutes I've explained already, given the fact that it's going to be very important in terms of market movement. You have German import-exports, and that's going to be quite important as well in terms of European markets and not influencing US markets itself. Yesterday, we did actually have stronger data out of the UK, and that certainly helped the FTSE regain its footing, but hold its ground. Okay, we had the industrial production come out at 1%. A month-on-month figure, and the year-on-year was 1.9%. So certainly beating expectations. But having said that, the data previous to that has been relatively weak. We had the shop price index down more than expected overnight, minus 1.9%. And in terms of Europe as well, I mean, we had the German industrial production month-on-month coming out worse than expected. So mixed set of data, you could argue both ways, and really it's all about the oil price. If I bring up the chart of oil and show you in terms of oil, you'll see that the FTSE is dictated by oil quite substantially, and as you can see here, we held that double top resistance at $50, and ever since then the FTSE has been under pressure. You can't see what you can see at present is a lower high, and obviously weakness ever since. We seem to be making a base here at the 47 level, but the carnage and the damage has certainly been done. Certainly an earlier indication of it in H&S formation, so certainly keep an eye out for that in terms of the next move on the price of oil. In terms of copper itself, given the ICANN news yesterday, that certainly helped the Freeport McMoran, and obviously that helped copper as well to a large extent, but we have come off the highs, as you can see here. And there's a H&S formation on the 60-minute chart, which again is actually bearish. And given the fact that China didn't rally as high as everybody expected, then you do have a risk-off scenario, or facing a potential risk-off scenario there too. Okay. In terms of the dollar itself, bring up the dollar index. As you can see, we have had a clobbering ever since. Obviously, post NFP, etc. We are in no man's land now. H&S formation certainly remains active, and there is an unfilled gap below. So don't be surprised if we see further dollar weakness. Now, we need to remain open to that. and obviously that could be interpreted as being bullish for the FTSE 100. So again, we need to remain open-minded in terms of that information, that news as well. Okay, in terms of the FTSE 100 then, let's have a look at the technical picture. Now, the volatility index is the one that I always generally start off with because it's very important. It did put in a bottoming tail yesterday, so again, that's something that we need to remain open-minded to. A 60-minute chart, yes, we did get thrust higher, but that 200 MA certainly looks like it needs to be tagged, although given the fact that we have put in a bottoming tail and previous resistance equals support, we shall have to remain open-minded and see how this VIX trades. If we come back and retest this pivot low, then I'd certainly expect that to hold, and I would be short FTSE 100. I already am short the FTSE from 6380 region on the fundamental analysis service, but from a day trading perspective, I'll have to see and reassess then. Okay, in terms of the FTSE 100 now, bring up the FTSE itself, the main index that we trade day in, day out. The weekly chart itself is slammed into the 200 MA, so therefore that would act as a resistance for now. Okay, so it's very important, 200 MA touch, and certainly into resistance. The daily chart, we've obviously failed at 61.8%. We've put in a topping tail on the FTSE 100, and given the fact that oil prices and copper are certainly into resistance, adding also the fact that whilst we're talking about copper and oil, it's important that you look at the chart of the Kiwi and the Aussie as well. Now, I was actually short the Aussie overnight, managed to catch 40 pips on the short side, but from a FTSE 100 perspective, Kiwi is into resistance, as you can see in your daily chart here, and also the Aussie is into resistance. This is something that I told subscribers on my live analysis service, my day trading service, yesterday, and that's why we were short the FTSE 100. As you can see here, it's certainly putting a pivot potential top as well at fib 75% and diagonal trend line resistance. So given the fact that the Aussie and the Kiwi are into resistance, that means the FTSE 100 is into resistance, and given the fact that copper and oil is into resistance, and it's telling us the dollar is certainly catching a bid. Okay, I can go into dollar index further and look at USD JPY, USD CHF, and try to elaborate further, but I think that's enough for now for the FTSE 100's perspective. Now, going back to the weekly or daily chart, fib 61%. Topping tail, again, previous support equals resistance, so even if we were to push higher than 6430, it would be the next level of resistance, but that's certainly holding for now. Again, it will be about the retest. If we get back to 6250, which more than likely is the case, and then we'll have to reassess that once we're at 6250 in terms of the next move on the FTSE 100. 60-minute chart, we've had this bullish channel. Obviously, we've broken out of it and looking now to potentially put in a right shoulder, so to speak, so potential bounce from the 6320 level and potentially put in a H&S formation. So again, looking at it from a hypothetical scenario, you have your left shoulder, the head has come in at a double top perspective, and then obviously now right shoulder, and down we go. Again, the support levels, once we breach that, you have this 6285 and then 6250, and then obviously the inevitable 6170 if the market obviously is extremely bearish. Okay, so from the FTSE 100 10-minute perspective, yes, we had this rising contracting wedge pattern. We've broken out of it now, and again, like I said, all eyes will be on the FTSE at 6325, and any push or thrust higher will be a shorting opportunity in terms of the H&S formation. Again, pivot support is seen at 6305, which is previous resistance equals support. You have support at 6250, and that 200 MA at 6270 is going to be crucial. Again, it's all about oil. Keep an eye on oil and copper, and they will dictate the next move in this market. Also remember, given the fact that the Nikkei was down overnight, no more than 1% now, so very bearish. Also, given the fact that we've got uncertainty with regards to central bank minutes, etc. So all those factors will certainly weigh on the FTSE, and it'll be interesting to see how it reacts. The only quagmire or concern I have really is the actual S&P and the price action there last night, but obviously that has fizzled out today, and we shall see exactly how that responds. Okay, so the FTSE 100, you've seen the FTSE 250 has been weak regardless, hence the reason why I've maintained my bearish perspective on the FTSE 100. If you look at the FTSE 250, we hit the 200 MA, we hit that previous resistance equals support, and our previous support equals resistance, and the market certainly has reversed quite sharply. Looking at a 60-minute chart, you can see the H&S formation has already played out, hence the reason why I was arguing for the H&S formation on the FTSE 100. The sell-off will obviously lead you to this 200 MA and previous resistance equals support. If that fails, then you have this level here as well, and then obviously ultimately down here is equal to support. But as you can see here, clearly the FTSE 250 is into resistance, and therefore the FTSE itself obviously is expected to find resistance too. So again, very important, very important matter. Okay, the actual FTSE indices or FTSE individual sectors. So the most important one is FTSE oil and gas. As you can see here, we have extended this route or rally itself. You have resistance or approaching resistance now in this zone. Let me just show you and demonstrate. Bear with me. Here we go. Support around there. Previous resistance or previous support or equals resistance, as you can see there. So it's very, very important. Okay, so we are back into that zone for the oil and gas sector. And given the fact that oil itself is holding at resistance at $50, that in itself is bearish. As you can see, a flush late into the session, and the daily chart has broken out of that down sloping trend line, and we're back into that resistance. So from a long-term perspective, if oil breaks out and obviously copper starts to break out, then you do have the argument for an inverted head and shoulders formation. But again, that's all hypothetical for now. Okay, all hypothetical for now. Okay, our main focus really would be on the fact that this market or this mining index is now into resistance. Okay, I think that's a wrap in terms of, I can look at other variables, but I think that should be sufficient now for today's trading. Again, go back to the 10-minute chart. Your gap fill is going to be at 6325, and then obviously that fails, then you have 6305. If that fails, then you're going back to the 6270 and 6250 region. Safe trading today. Be sure to visit cfds.com for your trading needs. Goodbye now.